Okay, well, good morning, everyone, and thank you for joining us for another Breakfast with Benefits. And today we welcome back Chantel Shawnee, and Chantel is from Cross Country Mortgage over in New Jersey, but she services the whole Hudson Valley area. And great presentation last time, Chantel. I think we had gotten so much great feedback from you because you were so very thorough and answered everyone's questions and kind of broke it down to make it very easy to understand. So Chantel is going to be speaking about FHA loans, correct, today, and also like for first-time home buyers and what you can do for your clients. And so without further ado, I'd like to introduce Chantel Shawnee from Cross Country Mortgage.
Thank you, Mary. Good morning, everyone. So a little bit about me. I'm not your traditional instructor. I am a mortgage banker. I do mortgages from morning to night. Like I tell people, I eat, walk, sleep mortgages. That's what I do. I've been doing it for 25 years and I love doing mortgages. I love working with you guys. And basically, I like to take the client to closing. I'm known in the industry for an aggressive lender. I do get a lot of loans that are denied by banks and I close them, not because I'm a magician. Is that I'm very creative. Number one, I know what to take out. I know what not to show an underwriter because less is more in the banking world. But number two, my company supports it. Cross Country has the appetite for aggressive loans, and that's why I'm able to do it. So today's topic is low down payment. And a lot of my business is low down payments. And I like helping the families who are very well qualified. They just don't have those 20 and 30% downs or full cash offers. And there are many of them, right? So today's going to be a good class. I would recommend that ask me questions. You guys go through a lot when it comes to a deal, how do you pre-qualify someone? What is it good? Like there's so many things a realtor goes through. It's incredible. Ask questions because everybody can learn from that question. So if you would like, you can just mute, unmute, ask, and then mute. Okay, and then we can go on. So let's start with FHA. Okay, FHA is the number one government-backed mortgage in this country. FHA stands for Federal Housing Administration. You should know that. Why should you know that? Because you should tell your clients that, right? Hey, FHA, oh, what is FHA? It's Federal Housing Administration. It's the number one insured government-backed mortgage in this country, right? It was created by the government to help home buyers qualify. So what they did is they created a very easy to qualify mortgage. Okay, the number one condition to get an FHA loan, guys, remember that. Well, make notes. Remember these little things I'll tell you because you're going to educate families, is that it has to be owner occupied. FHA will not do loans for investors. They're trying to promote home ownership for first time, but not just for first time home buyers, but for people who are going to occupy the property. Okay, remember that. There's no 3.5 down for an investor, guys. Okay, I wish it does not exist. Okay, and as we go along, you will see, I'm going to go take a deep dive into FHA so you understand it, and you'll understand how simple it is to qualify. And you would agree with me by the end of this session. I want to share screen. So I'm going to, do I have permission to share screen, guys? I mean, Mary, do you see my screen, everybody? Okay, good. I'm just going to enlarge and fix my screen so I can see all of you. Amazing. Okay, good. Okay, so it's a purchase with only 3.5 down. Now, 3.5 down for what property type? I want you guys to answer. Let's talk to each other because we'll learn better. Retention is better when we engage. So for what property types is it 3.5% down? Anybody wants to answer? Help me answer that question. Yes? No?
Single. Hi, good morning.
Hi, thank you. Thank you for attending. Yeah.
No problem. You're welcome. Single family, multifamilies, condos, and I believe co-ops too.
Okay, great. Great that you said that. So let me clarify this. It's for 1 to 4 family. Residential property is defined as 1 to 4 family. So FHA will fund on 1 to 4 families. Yes, they will fund on condos, but there are a lot of restrictions, which we will cover later. Co-ops, no, they do not fund on co-ops.
Yes, that's correct.
But
Sorry.
we fund on PUDs. You know what's a PUD? PUD PUD? A planned unit development. So a PUD is like when you see a lot of these houses and they all look alike, they're all in plan, but they're not condos. Condo is different and PUD is different. A PUD is where the homeowners do not own the common areas. In a condo, they own the common areas. In a PUD, the association fees are a lot less. FHA will do PUDs, which is great. I do them all the time. Okay. So now that we got that covered, let's talk about, let's go to the next slide. Okay. The benefits is, of course, the down payment, which is as low as 3.5% down. So I've had clients that have more money, but they wanted to put 3.5 down. Why? Because sometimes when I sit down with them, so one of the things I do, guys, when I work with a family, I'm good with finances. That is my niche. That's my calling. I'm good with money management. I'm good with budgets. And I bring that to the table because when I meet the client, I know so much about them. It's incredible. I know the credit, their income, their money, their retirement, the issues. I know just everything. So it's easy for me to guide them. So if they're paying credit cards with 20 to 25% interest, right? And then they have some extra money, it's in their interest. And you see what happened in the last 2 years, the rates were in the twos. Take advantage. My God, it was crazy what happened last year. So a lot of people, even though they had the money, they would say, listen, I would rather keep the money to fix the house, right? If it doesn't have a finished basement, I'd rather use the money to fix it, to finish that basement, or to move, or to clean, or to buy some furniture, whatever the case may be. That happens too. Okay. Minimum credit score. I wanted to ask this question, but it's right there. So the answer is 580. Now, as realtors, you will be very confused with this question. Different lenders are going to give you different answers to this. If you ask the bigger banks, they don't do loans for 580 credit scores. We do them. Okay. If I have a client whose credit score is 580, I don't like it. I want to coach them and train them on how to get out of the 580s and come into the 600s. Why? Because what if by the time they find a house and for some reason it becomes 579 and all that effort that you guys put? And number one, number two, I'm going to tell the realtor upfront. Listen, the credit score is 580 and this is the plan. I told them to do these things. I told them not to do these things. This is our handshake here. And you and me as a team are going to guide these clients. We're going to talk the same language together. Okay, we have to be very connected because we want to close our deals, right? And that's it. At the end, it's about closing. Who cares about anything else? And a lot happens. There's too many touch points. Too much can go on. I'm sure you all have experienced that, right? So seller concession, seller can contribute up to 6% of the sales price, which pretty much means the entire closing costs can be financed, right? We all know it's a seller concession. It's really rolling. You're adding the price, right? This is what happens. Hey, the seller wants 500. Okay, let me add 20,000 on top. 520. We'll offer 520. You give 20 back to the buyer and pay their closing costs. That happens. That's how it really, in reality, that's what ends up happening. So the limit is up to 6%, which is a lot. Okay. So let's talk about the last 2 years for a quick minute. A lot happened in 2021. Were FHA loans getting accepted? No, right? Because it was crazy. It was crazy with the number of offers the listing agents were getting. So they were cherry picking. It's not happening this year. All of a sudden, buyers have become gold again. Now we want buyers. We need buyers. The rates have doubled. The buyers' sentiments are low. So it's actually even more important for a lender and a realtor to go very strong and help a family, educate them more, calm them down, right? We need to calm them down. I sometimes feel we're even psychologists with them. We can do anything. It's crazy. Because I don't blame them when they turn on the TV and they listen to the news. What are they reading? What are they listening to? Inflation, rates are hiking, another Fed increase coming up. So that affects their sentiments. And so they're not in that much of a rush that they were in 2020 and 2021. Guys, I'm talking real estate. Would you agree, or do you want to say something about that? Please, I mean, say something, because this is your thing now. How do you see the market?
Normalizing?
Normalizing, right? Actually, this year, a lot of my clients were able to get their offers accepted. They tried for the last 2 years. They got denied. They were not able to get into that bidding war. They lost it, but now they're getting it. So we have a lot of people now that we can go back and say, hey, yes, things have softened. We can get the offers accepted now. So one of the things that I do to overcome the objection of a low down payment, right? Because first of all, I love talking to listing agents, sellers, attorneys, sellers, like everybody. I love being interviewed. Number one, I have all the docs. I know my clients. I'm very confident I can talk to the listing agent. What does the listing agent want? At the end of the day, do they really care about the financing? They just want a smooth transaction for their clients. The listing agent just wants no drama, right? That's it. They just want to look good with their sellers. They want to make the right decision. If the seller has 5 offers, they want to make sure that they guided the seller right in helping making the decision, and we have a smooth and easy transaction. That's what they want. So I will talk to the listing agent. So many a times what I do with my FHA buyers is I get a commitment, pre-commitment, without a property address. And I explained that to them. I said, listen, if we're going to compete with somebody who's going to put 20% down or a higher down payment, then let's at least put our best foot forward and get something called a fast track approval. I take the application, it goes to underwriting, I have a commitment, we're just conditioning appraisal, home insurance, title, contract. Because we have everything else, right? Now, when I tell the listing agent, look, I have all of this, they have everything, they are very motivated. Sometimes the lower down payment people are more motivated than the people who are putting 40% down. They'll back out of the deal, but these people will hang on to the deal. So that happens a lot. So yeah, one of the objections is, like, how soon do you want to close? What does the seller want? I always ask the listing agent, what does the seller want? Yes, I can close in 2 weeks, but sometimes the seller doesn't want that. I've had cases when I ask the question, say, hey, can we close after 60 days? Because they need some time. Yes, we can. What does he want? We can try and accommodate, right? Because we want to make the deal happen. So parents or relative can co-sign. So let me explain that to you. In an FHA loan, if our client is buying a one-family house, we can use a non-occupant co-signer to qualify. Now, let me tell you a story. We have a client where let's say the client's income is 40,000. Clearly does not qualify. Income is too low. So now he goes to his family and says, hey, listen, can you help me? And let's say the family lives in California. They live anywhere, doesn't matter. I can use their income to qualify this client in an FHA loan as long as he's buying a one-family house, not a 2, 3, or 4. I use that a lot. I use that a lot. So a lot of low income down payments, we can get that mortgage down. I'm going to change the slide. Let me see what else I want to tell you. Okay, the down payment, whatever money is required, can be 100% gift. I have done an FHA loan without bank statements. I just did 100% gift. Everything that was required, I just used the donor's bank statement, boom, and I closed the loan. I'll tell you why. So I got a loan. I told you, I get a lot of loans denied by other people. I'm known in the industry for that. So I got a loan where it was denied by Bank of America, with all due respects to them. It was an FHA loan. And the only reason they denied it is because the client had put cash deposits. They put cash. We all know here that cash deposits are not allowed. Guys, yes? Say yes. Somebody say yes. That's a big issue in the mortgage industry, okay?
Yes.
Yes, because that's every down payment, all the money that's deposited has to be sourced, where it came from. So I always tell the clients right up front from the first time I talk to them, no cash deposits. Show me your bank statement. I want to see what's out there. Sometimes they tell me they have 50,000. When I ask for bank statements, it doesn't have 50,000. Where's the money? It's under my bed. It's with my brother-in-law. I lent it. All kinds of stories. I have to sell a property in my country. I mean, I can tell you, I've come across a lot of stories. So we need to guide them, right? So when I give a pre-approval, guys, I have checked credit, tri-merge, I've checked assets, and I've checked all the income. I am not signing on a letter that's not fully pre-approved. I don't even think pre-qualification should be allowed. That's not in my world. That doesn't exist. That's BS. That's like just, if it sticks, it sticks. If not, that's crazy. So coming to assets, so I coach, we can coach. And why am I telling you this? Because you can start talking about it to your client. You guys are leaders. We lead our clients, we educate them. They don't know. So we tell them, hey, listen, I want you to only start putting your paychecks, because that's the only thing that we see. Whatever you earned, the rest of the money, we will do a gift. A gift has to be done by a family member, and I teach them how to do it. It's very, very easy, and we get it done. Okay, so Bank of America just denied the loan because of that. I closed it very easily. I removed all the bank statements. I did 100% gift and I closed. It's allowed. FHA allows it. I'm following guidelines. I'm not doing anything miraculous. Okay, so that's simple as that. I've had a case, by the way, a client walked in with a contract, right? Usually that should not happen. I should first pre-approve them, but no, it was reverse. A realtor referred, but he was already under contract. The bank statements were a mess. I have no room to guide because we had to close in 30 days. I just removed it all. I'm not going to show the underwriter this nonsense because we're against guidelines. It's never going to work. Let's just show the underwriter what she can see and which is compliant, and we can pass it fast. No drama. Guys, I'll tell you one thing in that thing. Never show an underwriter something that is an issue, because once she sees it, you can never take it back. And we have to respect their position, right? You can't say, hey, can you undo it? I know you saw it. Can I remove it now? Sounds very cute, but we're disrespecting. So I would rather not show it to her, okay? Damage control is much better. Okay. No reserves are required for an FHA loan for a condo, one family or two family. Does everyone in this chat room, do you all know what's a reserve? What is reserve?
Money in the bank that will cover a certain period of time.
Thank you, Alan. One month reserve means 1 month of your mortgage payment. So if the mortgage payment, which is principal, interest, taxes, home insurance, mortgage insurance, if it is, let's say, $3,000, the bank wants to see that after providing the down payment and the closing costs, the client is left with at least that 1 month of mortgage payment. That is the 1 month reserve. 2 months is 2 months of mortgage payment. 3 is 3 months. Okay, that's the definition of reserve. In an FHA, you do not need any reserve for a condo, 1 fam, 2 fam. However, for a 3 and 4 family, there is a requirement of 3 months reserves. In a conventional loan, it is 6 months reserves for a 2, 3, and 4. So I will do the comparison as we go along, and you will see that FHA is a lot easier. Okay, and I will do the comparison. We'll go over some stuff going forward. Guys, do you have any questions? Because I haven't seen the chat. I'm not looking at it. I'm just looking at you guys. If you have any questions, just unmute and ask.
Did you switch slides?
Yeah.
Still the one with benefits.
I'm sorry?
The one that's showing says benefits.
Yeah. What about that? What's your question?
if you were still on that slide, because it sounded like you changed the topic, so I was wondering if you changed.
No,
the-
no, I'm going a little bit further on assets, so I'm still on that same slide.
Oh, okay, thank you.
Okay, yeah, I'm still on the same slide, yeah.
I have a question.
Sure, Nancy, go ahead.
Somebody
no,
told
you-
me that you can pay your down payment with credit card. Is that correct? I never heard of that.
That's good. So down payment should not be paid by credit card, right? So I've had cases where client didn't have the money and I said, yeah, take the money from the credit card. But then I had them put the credit card money in a relative's account and then we just had to be a little bit different in doing it. This is a recorded call, guys, but no, it should not be credit card because that's a debt. You should have that down payment of your own. Okay,
I have
if they
another
took
question.
If they took it, then I don't want to see that deposit going in the account. I don't want my underwriter to question where that money comes. Oh, they borrowed the funds. Yes.
Question. So how many years of tax returns do you have to show? And what's the limit of the loan that you can get?
I'm coming to that, Jay. Jay, right?
Yeah.
Okay. So Jay is asking what are the income document requirements for an FHA loan? Okay. It is W-2s and taxes for 2 years or 1099s for 2 years. Recent 2 pay stubs. A bank statement to see the assets or retirements or whatever. So what are the 3 things that I look at to qualify your clients? Is income, credit, and assets. Now,
What
if
happened?
the client is
What happened to the
self-employed,
what happens to the clients that are in the affected industries during the pandemic, such as entertainment and hospitality? They do not have 2 years.
that is a great question, Jay. That's an amazing question. Let me repeat his question, guys. It's a good one. So he said, like, let's say somebody worked in the entertainment industry, restaurants. We all know what happened to the restaurant industry, right? Entertainment in during the pandemic. There was no income. So Jay, did your client collect unemployment?
Yes.
That's perfect. I had many clients like that, Jay. So that's fine. I'm going to use the 2 years of taxes. Now I'm going to go to 2019, pre-pandemic. Show me that you had income before that. And that's it. I will totally give them the credit. They're back to work. I'll give them the credit based on their current income. I want to make sure now they're in line to make what they were making pre-pandemic. Show me some pay stubs. Are they salaried? Are they hourly? If they're salaried, it's easy. If they're hourly, what is the average income they're making now? Did I
What
answer
about
your question,
self-employed?
Jay?
What
Did I
about
answer your question?
self-employed? I'm sorry.
Yeah.
Uh,
What about?
Yes, you did. The other question was, what's the limit on the loan that you can acquire from?
I'm going to come to that. I'm going to show you something very soon.
The other question was self-employed.
Great. Another one. Great question. What happens to self-employed? I do a lot of business for realtors and for other self-employed people, right? Self-employed people, there are like, what is it? Like 43 million clients who are self-employed in the US. It's a big number, right? And what happens? They usually don't report income, right? Let's say pandemic, they didn't report a lot at all. They got PPP loans, as a matter of fact. And then let's say normally also they don't. So if for an FHA loan, we need 2 years taxes. Now in the Schedule C, like all you realtors, you get a 1099, you're going to put the gross amount in Schedule C, and then you're going to report all kinds of expenses and then have an adjusted gross income. We're going to do the average income for the last 2 years. Now in the pandemic, if it was very low, self-employed people are very badly affected on qualification. However, I have a great conventional low down payment program. 5% down, 1 family house, and I use only 1 year taxes. So do you know, I did a lot of closings this year, but just using 1 year taxes. If they reported enough in 2021, then yes, a lot of people didn't. So I work closely with CPAs and accountants. And so for 2022, I have a lot of clients and appointments already scheduled in January, where I'll work with them on their 2022 income. So my clients will not file their taxes without showing it to me. And I just use 1 year. And I run it through the system, get an approval, then give the okay, because it's a big responsibility for me to say, yeah, file taxes. Okay. So me and a CPA and accountant, we go hand in hand, very close. And I always tell the client that, listen, your CPA is going to look good with you if he reports less income and you pay less in taxes. But what are your goals on buying a house? If you want to buy a house, then this is what you need to do. Okay, and yes, you're going to pay a little bit of money to the IRS, and you know the reason. Just do it for 1 year. We close. I don't want to know what you're doing next year. Did I answer your question, Juan? And does anybody else have any question on what I just said?
Yes, thank you.
Okay, good. So there it is, right? A minimum down payment 3.5, 2 consecutive years of employment and verifiable income, 1 to 4 units, FHA approved condos. I'm going to talk about that. And manufactured housing unit must be on a permanent foundation. Okay. All right. Let's talk about the differences between an FHA and a conventional loan, right? Advantages are the flexibility, down payment, seller can put a higher seller concession, and there are disadvantages of mortgage insurance and more in-depth loan process, which is not true, but I'm going to go over it one by one, okay? So in an FHA loan, you can put 3.5 on a 1 to 4. Now let's talk conventional. How much is the down payment on a conventional loan? I want someone to help.
20%? No?
Okay, no. So let me break it out for you, right? This is a low down payment. So this is what you're going to learn today. On a 1-family house, conventional loan, I have a great affordable loan product with 3% down, but it has income restrictions. But without income restrictions, it's 5% down. 1 family. Now, when it comes to a 2-family conventional, it's 15% down. 3 and 4 is 20 to 25% down. Now you see there's a huge difference. That's why FHA is still very popular in multifamily homes. A lot of people want to put 3.5 and get a 2-family first time, rent the other unit, live in the other, get a decent rate, right? So I'm going to share with you all something I do with all my clients. Because a lot of clients will come to me and say, oh, I want to do real estate as an investment too. I want to buy my first home, but then I would like to buy another one. And I tell them, I'm going to teach you how to do it. I will guide you and hold your hand every step of the way. So look over here. Right now I'm doing my clients' children's mortgages because I'm doing this for 25 years. So so now I'm actually teaching them how to do it too. So look, the easiest way to accumulate wealth through real estate is this. First of all, are we all in agreement that one can accumulate wealth through real estate? Yes or no?
Yes.
Yes. So much fun. How many families have we helped by selling them a home? And when the values go up, it's exciting for us, right? So look, you buy your first home, and if you want to get a multifamily home, you get an FHA loan. You put your 3.5 down, get a government loan with very little money down, right? And you get a good rate. And now you stay in that house. Now I want to ask you all another question. How long does one have to live in a house? Let's say they got an FHA loan. How long do they have to occupy this house before they can buy another one and move out and go and live somewhere else?
3 years?
I love participation, guys. Thank you for all of you for answering and making it a little bit more fun. 3 years. Okay, Lee is saying 3 years. Anybody else?
10 years?
Who said
2.
Alan is saying 10 years?
2.
Okay. Anyone else?
2 years.
Okay. So the answer, guys, is 1 year. Okay, and we are all going to, so having like, I educate all these people, I help them, it's a lot of fun, I enjoy it a lot, and you can too. They'll be very grateful to you. So look, so you get a 3.5, after 1 year, now you have a 30-year fixed low rate. Now you rent the whole thing out, and now go buy your one family house. So now you have this 3.5% down, 2 family, that's your retirement, because let it pay for itself. Now you go buy a 1 family. Now let me ask you a question. Now that you want to leave this and buy another house, 1 family, what is the minimum down payment?
Three to 5%.
Alan saying 5%, anyone else?
5%.
That's amazing. That's absolutely right. So now you have 2 properties in a very short period of time. One is your investment, became your investment organically, and then one is now you live in a 1 family house and now you're accumulating wealth. A lot of my clients' kids who've seen their parents accumulate so much money through real estate, these young people, it's fun, they're doing it. They love it when I sit down and tell them this is what you can do. They absolutely love it. Okay. Any questions?
Before you move on, can you repeat the down payment for the multifamily house using FH loan when it comes to 2 family, 3 family, 4 family?
3.5% down. You're going to live in the property. Remember that it's always primary residence, Alan. You're going to live in there. You're going to get a house, 3.5%, and you live in there now. You move. Occupancy is the #1 fraud in the mortgage industry. It's not income, employment, it's occupancy. You always do it the right way. You move in there after 1 year. After 1 year, anytime you want, you buy your 1 family with 5% down, conventional. Can you get 2 FHA loans? Someone already has an FHA loan. Can they get another one? Yes or no?
Yes,
Yes, Alan? Can you get 2 loans?
after a certain time.
No, you cannot. Let me explain this to you, okay, guys? Because this is a common question. You will get it, I get it, and so let's get educated on it. You can only, so typically the answer is no. However, there's an exception. Here are the 2 exceptions. The only way you can get another FHA loan is that when you bought this house, let's say you bought a condo, a 1-bedroom condo, you were single. You lived in it. After that, you got married. Then you have another child. Now that 1 bedroom is too small for you, I will need birth certificates. Okay, then you can get it. Then you can get an FHA. Or let's say you bought a house here and then your company moved you to Florida. The distance is over 100 miles from your subject property, then you can get it. Okay, then you can get 2, otherwise no. You can just have 1. So a lot of my clients, what happens is when they get an FHA loan, FHA, remember, everybody internalize one thing, it's an insured loan by the government. The government created this loan for people to qualify easily to promote home ownership. However, they have to pay mortgage insurance no matter what. Now, the bank insures themselves against future defaults because they're giving this loan so easily. They want to make sure that if the client does not pay the mortgage in the future, that MI will offset their losses. Make sense?
Yes.
So I'm a little confused. So you said that after 1 year, we can reapply for an FHA loan, but we can't have 2 FHA loans at the same time. So what do we do with the first loan? Like, do we change the type of loan that it is?
Yeah, we do that a lot. A lot of my clients say, yes, it's more sensible for them. Hey, let's convert the first loan to conventional and then get an FHA.
Okay.
Vivian, it's case by case. At the end of the day is what makes sense. Once I know what they're doing, what the dynamic is, I'll give them the options. But I've done that many times. what were we talking about before the question? Yeah, 2 FHA loans, right? We were talking about that. We covered that. Okay, good. Let's talk about the DTIs, which is a huge advantage. Debt to income ratio is what I do as a lender to tell the client and the realtors how much a client qualifies for, the maximum limit, right? So when I meet the family, I'm going to say, listen, I checked all your income, your assets, your credit, da da da. You want a one family, okay, you qualify for 600,000. I'm putting 15,000 in taxes on top. That's what you qualify for. Here are the payments. Are you okay with it? Once we come to an agreement with the payments, I'm going to conference the realtor and say, listen, here I'm ready. We are ready with the pre-approval and we want to give you details together. We are a team. I've qualified the client for 600. The taxes that I've used is this. Is that okay? Less, more? Please tell me. Okay, they say yes. Okay. Clients know the payments. They know the rate. They know the payments. They can afford it. They're ready to buy. They have no lease. If you show them a house tonight, they're ready to buy. Or it could be, listen, the assets is less. They need a concession. Or they're waiting for money, whatever the case may be. So it's a very good handover, right? That I've checked everything. Now we're ready to go. Okay. So now the coming to a DTI is basically based on their income and their debts. We do a calculation. And we know a DTI basically is the monthly payment, mortgage payment, plus all their debt divided by their income. Now, in a conventional loan, the maximum DTI can be 50. In an FHA, it's 56.9. So we lend more money. That's a big advantage. Okay. Now, let's talk about a disadvantage. The disadvantage is that there's mortgage insurance premium. If a client is putting any down payment less than 10%, it's for life. They have to refinance to get rid of that MI. They have to refinance to a conventional loan in order to get rid of that MI once they have that 20% equity. It doesn't, in a conventional loan, once they have the 20%, they can call the bank can do the new appraisal and remove it. It's a process. That's a disadvantage because it's a government insured loan. Now, did you know that if a client puts 50% down, they still will be paying MI in an FHA loan? So anybody with a 20% down should not go for FHA. We don't want them to pay the fees. Unless their credit score is 580, then they have no choice, right? Conventional will not do it. Conventional guys, the minimum credit score for a conventional is 620, but they don't want 620. They hate 620 loans. They give you a very high rate with fees at 620. What they like is superior credit. Conventional wants the best rates and the best deals are with the credit scores over 700. And then there are tiers. They give you higher rates based on every tier that you come down lower. Okay. Number two disadvantage of a conventional FHA loan is condos. So I will send you all a link of condos, and I think condo is the next slide. Here, this condo financing, okay? You see there's a link there. I'll email it to all of you. Mary, will you be sending me their list and their emails later?
Our company policy does not allow us to provide third parties with email addresses, but if you send the information to me, I will be sending out the recording to everyone. So
You know what, just guys, you email me. I'll give you my contact. Email me and I'll send you a couple of important links that everyone can have, okay? This is one of them, condo eligibility. So if I have an FHA buyer, right? You refer an FHA buyer to me, I'm sharing this link to the buyer and to you. We are a team. None of us need to waste time. We need full clarity. In this link, if you enter there, what you need to do is put the zip code of the areas you want to find out, hey, which buildings are approved in that zip code, and you have to scroll to the right and it will tell you which are. Most of them are expired or rejected. There are very few buildings that are actually approved for FHA financing. Those are the only ones that can get it. That is a disadvantage. Most of the FHA buyers, they get frustrated because they can't buy a lot of the apartments they really like. And they sometimes end up buying a house even. I like all kinds of scenarios. Or I tell them, listen, let's try to change your credit or change your approval somehow to a conventional. I prefer to do conventional loans when it comes to condos. I have many, many choices, too many choices, which FHA does not offer. That's a disadvantage. Coming to condo financing, that eligibility, like I said, I'll email the link to you, which you should save. Conventional is easy. We have a questionnaire. We send out the questionnaire and we get information from the condo association. And I have a lot of different programs I can go to based on the results I get, the questionnaire, okay? Okay, let's talk about appraisals. Oh my God, time flies. This is crazy. I'll try to go really fast because time is almost 10:15. So appraisals, guys.
You can take some more time if you need.
No, I just want to respect their time, but I'll try to do it the best I can. So now let's talk about appraisals, okay? Common myth, right? FHA appraisals are a lot different from conventional. So realtors have a myth. Things change. Like over decades ago, FHA appraisals were stricter than what they are now. Now they're almost the same as conventional. However, the two things that I will point out to you for FHA is peeling paint. FHA appraisal will condition for peeling paint to be fixed. It's a small thing, it's a pain. It is what it is. A lot of my buyers, I educate them and say, listen, if there's peeling paint, you fix it. Don't bother the seller for such a small thing. You don't want to lose your deal for that, right? Your appraiser, you don't get qualified for conventional, not the seller's problem. If we're competing, you do it, let's make it easy. That's one is peeling paint, and the second is a handrail. There's got to be a handrail. If there are stairs going up and down, then they want to make sure there's a handrail so there's no safety. Again, very small thing, not a big deal. The comps are the same. Sometimes a realtor will ask me, oh, FHA appraisal will come out low. No, they don't. Is there a special FHA inspection? No, there isn't. It's the same appraiser going. It's the same comps being used. Absolutely not true. Okay, for all you listing agents. I don't see any other disadvantage, but I'm ready to ask you some really nice questions. So pay attention, everyone pay attention, because it's going to help you to qualify more people and work with more clients. Your client, here's my question. Your client did a bankruptcy, Chapter 7 bankruptcy. Now, after the date of discharge, after how many years can they get an FHA loan?
Is it one? 1 year of making payments on time?
No, this is Chapter 7, not Chapter 13, Chapter 7. They dissolved everything. Anybody wants to make a guess after how many years?
7 years.
I'm guessing 3.
I'm just for the sake of time, I'm going to speed this up, okay? It's 2 years after the date of bankruptcy. For Chapter 7, guys, it's nothing. Please reach out to bankruptcy attorneys for business. Please reach out to your clients who you think did a bankruptcy. The market is changing. There are a lot of foreclosures going to be coming up. A lot of people, there's going to be stuff up ahead. Be ready. And you be the educator. When I meet a client who had a bankruptcy, they're so surprised. Some of them even cry when I tell them they're approved because they thought it was 7 years too. They're hiding, thinking that they won't get qualified, but it's only 2 years. 2 years goes fast. Okay? Be the educator. Tell them after bankruptcy, they should open up at least 3 credit cards and pay on time. Because that's a requirement that you've reestablished credit after bankruptcy. Do not be late. Now, another question. If your client did a foreclosure, the sheriff came and took their home away, after how many years from the date of foreclosure can they get an FHA loan?
90 days?
Ooh, Alan, 90 days, really? There was a foreclosure. It's not 90 days. Come up a little bit. Okay, guys, I'm just for the sake of time. It's 3 years.
Wow.
In 3 years after they had a foreclosure, they didn't pay the mortgage for years, and the sheriff came and took the house, and yet they can get a home in 3.5% down, get a good rate after 3 years, which is really great. And let me tell you why is it great. For a conventional loan, Chapter 7 bankruptcy, they have to wait 4 years, and for foreclosure, 7 years for conventional. So you see, I just wanted to tell you about the flexibility point that a lot of these banks do not do FHAs, guys. They're not well versed with this stuff. If you have clients that are having a hard time in qualifying, send them my way, take a second opinion. There's a good chance that we could do it, or at least educate them, or let you guys know, either or. Or if you have any questions, reach out. Short sale. If somebody had a short sale, it's 2 years as well after the, I'm sorry, it's 3 years after the date of short sale. You can get an FHA loan 3 years after the date. If you have clients before who did a short sale, please reach out to these people. It's a great time to prospect these days. The business is slow for everybody. It's not, the phones are not like crazy off the hook, right? Please tell me. We are all in this together, guys.
You said for a conventional loan for a bankrupt, no, yeah,
This is the market
bankruptcy,
we
how
all
many
can
years?
talk to. I'm sorry?
For a bankruptcy, how many years is it for a conventional loan?
Bankruptcy is 4 years, Chapter 7. Foreclosure for a conventional loan is 7 years. FHA is 2 years bankruptcy and 3 years foreclosure. A lot of times, I'm telling you, I get rejects, like I told you. An attorney will refer a client when they have a reject, and it's because the bank is trying to do a conventional loan for a client that should never have been gone into conventional. It's just lack of understanding of guidelines. They don't know. It's just a wrong, you put a client in the wrong bucket, that's a problem. It's guidelines. You have to put the client in the right bucket. Anyway, moving on. One other thing, if I may say so, it's a good point, and that's why I want to say it. What happens is, if in a bankruptcy, the client owned a property and included that property in the bankruptcy, then it is 3 years after they sold the property or surrendered the property to the bank. That's where you guys, realtors, come in. You want to be that listing agent selling their property. They need to get rid of that property. Otherwise, they still own it. The deed is still in their name. Even though they did bankruptcy, they still own it. They need to sell it and get rid, or do a deed in lieu, like call the bank and surrender the property to them. Guys, sell it. It's commission involved, and it's a better thing to do. You should sell it rather than them giving it to the bank and then the bank selling it, right? Because that's what the bank is going to do anyway. Okay. Okay, FHA streamlines. Anyone knows what's a streamline, guys? Anyone?
No.
Oh my God, be ready for this. It's the only miracle left in the mortgage industry. If you have an FHA loan, you know, in 2020 and 2021, me and my team, my entire branch, we streamlined all our clients. We refinanced them while they were not working. Streamline is a program. If you have an FHA loan and if the rates drop or MI drops for any reason, we can just flip the mortgage from a high rate to a lower rate without checking income, without doing appraisal, and no bank fees. It's stupid crazy. It's so sweet. But you have to have an FHA loan. It's from an FHA to an FHA. So all our clients who didn't work in pandemic, I got them those tools without checking income. They couldn't believe it. They doubted it because they were like, really? You're not going to do an appraisal? Oh, you're not going to check my income? No, I'm unemployed. I don't care. I don't want your bank statement showing the unemployment. That I don't want. I'm not stupid. I'm not going to show my underwriter unemployment income coming in. Just that we're not going to show, but it's an empty 1003. It's an empty application, no income. I don't even write the employment in the application. So that's a really good program that we did a lot during the pandemic. I thought I'd let you guys know. Guys, as far as FHA loans, I'm known in the industry for FHA loans. If you Google me, you could Google me up, check my name. Google has not spared any of us. You'll see I have a very good reputation because I honor my word and closings. If I say I can close in 2 weeks, I do, is because I drive everyone crazy to close in 2 weeks, including you guys, because I cannot close a loan alone. It takes a team to close. Whatever it is, we're a team. Everybody has to run to make things happen. but yes, it can be done. Okay. And we do a lot of fast tracks for low down payments. That's my cell phone number. In case you want to take a screenshot, that's my email. In case you want to, if you want those links, I would be happy to send it to you. I always stay in touch with realtors, with market updates, with what's going on in the mortgage industry. In case you want to know, just shoot me an email and I would love to, send you the updates too, which you can forward to your clients, especially now. There's a lot going on with stocks, bonds, rates, with the inflation reports, lots happening, okay? I want to take this time right now. I have not too much time, but I do want to cover this. Let's talk about, you know what? Let's go ahead and talk about a 2 or 3K loan before I go to this flyer. A 2 or 3K loan is a government rehab loan. It is also just like an FHA loan. But you can borrow money to fix the house while you buy the house. I'm one of the few lenders who does a lot of 2 or 3K loans. It's not an easy loan. It's very intense. You have to work with licensed contractors. You have to work with HUD consultants. It takes a lot of work to do. It's not for every client. So when it comes to 2 or 3K, I'll have a very intensive interview with the client to explain to them what they're getting into. Some of them say, okay. Some of them say, I don't want it, which is fine. But it's better to determine the appetite of your client right from day one. So there's no surprise. I do another class, which is just a 2 or 3K class. I teach another class, which is a good class too. In case you guys want to attend, be on the lookout. Mary, am I doing another 2 or 3K class?
Let me look up on our calendar and see what you
That's
have.
fine. That's fine.
We can
So
change
moving on.
this too if you want to.
Yeah, I would like to know about that. I have a client with 203K and I haven't really worked with it before, so I'd love to hear more about that.
Yeah, I explained the whole process and how it's done and how you as a realtor, you should not be wasting your time. We need to determine if this client is, the client also has to qualify for a 2 or 3K. They need to have an appetite for it. I had a doctor who said they wanted 2 or 3K. I had a Zoom interview, 30-minute interview with the doctor, and I explained the process and they were frightened. They were like, I don't have the time. I'm a surgeon. I don't have time to deal with contractors. This is not for you. We do, so it was a wrong fit. It's better to do that right from the beginning. Okay.
I have you down, Chantel, for October 18th for VA loans, but.
Oh, I'm doing a VA loan. Okay. So
VA
VA,
loans.
so guys, conventional, I mentioned to you, here's the flyer for low down payment. I can email this to you. But I don't have your email. So if you want it, then you have to send me an email.
And I will put her, Chantel's contact information on the email that I
thank
send
you.
all of you when we send out the reporting for today.
Mary, put my cell phone number because then you guys can text or call me. I'm one of those working nerds. I work a lot. I'm very responsive. So conventional, I mentioned the 3% down, but that's with income restriction. And then, we have options, but I wanted you to know conventional, we can do, of course, investment loans and stuff, but for primary residents, 3 to 5%, one family, 2 families are 15% down. VA is a great loan. Oh my God, love VAs. It's a loan for people who served in the Army. They get a certificate of eligibility from the government, and with that, they can get a 0% down loan. Now, the beauty is 0% down, no MI, no monthly mortgage insurance, and good rates. It's a privilege, and it's an honor to do loans for people who served in the Army. I love doing them. I'll be doing a separate class to take a deep dive into the program, but I just wanted you to have a little snapshot of this because we are talking low down payments. FHA we covered. I'm not even going to talk to you about it. USDA is for farmlands. Those are not very common loans at all. Okay. But that being said, I will email this to you when you send me an email. And I know that one of you asked me for loan limits, and I absolutely do not want to forget about that. That's something I wanted to talk about myself. So guys, let's talk about FHA loan limits. Anybody here, I don't want to say, please tell me, how much do you think is the FHA loan limit? Let's do some guesswork. One family house in a high cost area in New York. Let's say New York, Queens County, Kings County, Richmond County, Nassau, New York.
500? 500?
Huh? What did you say?
500K?
Okay, one family 500. Are you all ready for this? It's 970,800.
What?
Okay, that's good news.
And I'm going to send you this link, okay, by email. I want you to save it. This is what you're going to archive. People don't know this, but it's crazy how much. I do so many FHA loans. Oh, I'm doing one right now in New York, which is a really high loan amount, and it's 3.5 down. So they're getting a good rate. Anyway, 2 family. Anybody wants to guess how much is 2 family FHA loan limits? It's just for time purposes, that's 1.2 million, 43,050. 3 family is 1.5, you can have it. So if you see, let's say Bronx, right? You see Bronx here, 970, 800, 1.2, 1.5, 1.8. Then there are certain Albany. Albany is 420, which is not bad for Albany. It's not bad. 2 families, 651. So bottom line, I wanted to wrap up this class with that the government has made it so easy to get this FHA loan. I love FHAs. I do them a lot. I'm known for it. It's really great to get such a low down payment with so much money and no income restriction. You can make $1 million in income and get a 3.5% down FHA. Okay. So I tell clients sometimes if they tell me, oh, I like this house, but you know, there's a lot of repairs to be done. The basement is not finished. And I say, okay, how about I get you a lower down payment loan and you use your funds to fix it the way you want it? Would you like to do that? They're like, oh yeah, I never thought of it. Yeah, we could do that. Okay. Before I wrap up, I haven't looked at that chat group. So please, if you can unmute, and do you have any questions for me? Any scenarios that you want to go over, ask anything at all?
I'm surprised, Chantel, because I always was under the assumption that the FHA loans that you had to have very low income, but that's not the case.
No, you could make as much income as you want and you can get it. Isn't that cool?
So I wonder, that's what I'm wondering why, you know, I mean, I've had my loan for years on my house, but no one ever mentioned that to me as an option.
Mm-hmm.
You know, it's just amazing.
It is. Guys, one other thing. I am a Hispanic lender. So my entire team, start to finish and post-closing, we're all Hispanic. We all speak Spanish. And Hispanic clients love to come to us. And I'll tell you why is because my mantra in business is if I talk to a family, I will give them a solution. If they don't qualify, I'll tell them why they don't qualify, and I'll tell them what they need to do to qualify. So when they walk out, they at least know what they have to do. So a very common call in my office is, hey, I spoke to you 6 months ago. I did what you asked me to do. I want another appointment. That is a very common thing in our office. Okay. I do invest time with them. They may not like to hear that I'm telling them the income is not enough, but I'll tell them the choices. Either they can report more income, pay more taxes, or they can get a co-signer. What kind of co-signer is needed? Who's the best co-signer for them? Or if their credit is not good, I'll work with their credit. Sometimes they don't have assets. I'll ask enough questions to find out if they have any room for assets or they need to save. And I do some budgeting with them.
Who pays the tax on the seller's concession?
I'm sorry?
Who pays the tax on the seller's concession?
Okay, so you know what happens is that a seller concession is a part of the price, part of the sales price. So when your seller goes to the CPA with the closing statement, it's by the price. So if he's paying $200 more taxes and he's selling his home and getting a good price, it is what it is. Any other question?
Yeah, thank you so much for all this information. It's very helpful. I was interested that FHA Streamline, that chart you showed, can you just maybe explain that a little bit? I don't think I really grasp what that is. Is that just sort of like refinancing your FHA?
Yeah, I'm so sorry, Katrina. I just went so fast. Even I felt that because of time. I was like feeling the pressure and I wanted to talk more. So yes, let me explain that to you. If you or your clients currently have an FHA loan, okay? So I'll tell you stories. True stories here. I had a lot of clients with an FHA rate of 5%. Pre-pandemic rates, 4.5%, 5%, right? What happened in 2020 and 2021? The rates dropped in the 2s and 3s. We called all our clients and said, guys, I can reduce your payments by doing something called a streamline because the rates are low. And they said, oh, but I can't, I'm not even working anymore. I'm like, I don't need your job. No income check, no employment check. We're not going to call your job. All I need to know that you paid your mortgage on time. We're not sending an appraisal. No appraisal is coming in the house. Okay. So it's a quick government rate reduction from an FHA to an FHA loan. Now, and I told them, if you have any other family who has an FHA loan, let me know. I can do the same for them, but they have to have an FHA loan. If they have a conventional, I cannot do it.
No, I have, my brother has an FHA loan, and I wonder if this is something that could be good for him.
It could be good for him only if he has a high rate, Katrina. I would like to hope your brother refinanced in 2020 and 2021.
I don't know if he did.
If he didn't, then I would love to speak to him and see if it has to make sense, guys. So
Right.
it has to make sense. There has to be some savings, right? It's not about just flipping loans. I don't like to just refinance unless I see the cost versus the benefit. There's got to be some benefit to it. The benefit has to outweigh. Okay, rates are up now, as we all know. It's no more, it's doubled up.
One quick question.
Yes.
If someone borrows money from their 401k for the down payment on the home, well, actually, correction. Let's say they borrowed money already from their 401k for investing, say real estate investing, and then they now have money that's still available that they want to use that money to put down as a down payment towards the FHA loan. Is that something they can do?
100% yes. Number one, 401k is their money. It's their account. It's their own money. So the client can, just for everybody to know, can borrow money. Most 401ks will allow you to borrow money for your home. Okay, so I always invite clients to call their 401k right in the beginning, so we know how much they have access to. Number two is very easy. They have the money in the bank already. I don't even need to show up 401k. It's so easy. It's already there.
Right. Okay.
I only need 2 bank statements, or even one now and one before closing.
Awesome. Okay. Thank you.
Yeah, I see the one thing, guys, never show a bank more. I'm very selective on what I want my underwriter to see. I don't need to show her and give her more information than is necessary. Any other questions? That was a good one.
Yeah, I have a quick question regarding the 203K. It has to appraise for the listing price plus the repairs?
Good question, Alan. Yes. So a 203K appraisal will give us 2 values, as is value and after improve value. We need both. Good question. I would like to do a 203K class, and I hope you'll attend. It's a very good class. It's something that you should know about. It's not every lender does it because it's a lot of work.
I have a question.
Yes.
Can you hear me?
Yes, I can, Faye.
I just wanted to know, and I probably already know the answer. Does FHA cover land purchases? Does FHA cover land purchases?
It does not. So
okay,
it does not. And even in a 2 or 3K loan, you have to have, let's say it's a 2 or 3K loan, 25% of the structure has to be existing. And then so I did a 2 or 3K loan where it was just shells. The property was just shells. And this architect bought it for himself. And it took us a long time to close. Like, it was a big, huge project with permits and all that. But he built his whole, but 25% structure has to be existing. That's a guideline.
Thank you. Thank you so much.
Welcome. Any other question, guys?
Okay. Great. Well, Sheetal, as usual, you did a fantastic job of really taking the time to explain things. And I think we all learned something today. I know I certainly did. And you will be back with us on October 18th, I believe, to talk about the VA loans. And I also wanted to remind everyone, next Wednesday, we have another Breakfast with Benefits from our friend Alex from Real Grader, and he's going to be talking about the secrets of Google marketing. So that's really an important one too. But I want to thank you again, Chantel. Thank you everyone for attending today, and we will be sending the recording around hopefully this afternoon or tomorrow, and I will include Chantel's contact information on that so you can get in touch with her directly. So with that said,
Bye. Thank you for attending.
you.
I enjoyed the class. And thanks
thank you
for
so much.
Thank you.
Ciao.
right.
Bye-bye.
Thank you
Have a
so
great
much.
day.
Have a good day, everyone.
Pleasure.
Bye-bye.
Thank you. Bye.
Bye.